Happy Friday, traders. It is May 2nd, 2014. It is 8 a.m. Chicago time. Thanks for joining. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Let's get right to it. Non-farm payrolls came out a half hour ago. Expectation was 218,000. Came out at 288,000, caused a sweep up from approximately 1879 in the ES to 1886 for a push into the March NFP range on the low end. March NFP low was 1885. The high was the high of year, basically 1892. And since then, the market has pushed down. The unemployment rate dropped from was expected at 6.6%, previous 6.7%, and has dropped to 6.3%. This is the lowest unemployment rate since September of 2008. If you recall, September 2008 started the Lehman Brothers correction and the ensuing quote-unquote crash. The birth death rate is 234,000 versus previous 75,000 on the plus side. The unemployment rate falling faster than expected. Short-term interest rates are now pricing in the first Fed fund rate hike in June 2015 from July 2015 before today's report. So that's why you're seeing this rotation down, currently trading 1877 with a low of 1875.50. So we've pushed the high, the overnight high, and the overnight low at this point. Looking ahead, we have what's left for today is really not much. UK GDP estimate coming out at 9, and the JOLTS job openings. What? No, this isn't correct. So hang in there a second. Looks like I'm looking at an old. Okay. So looking ahead, we have ISM New York at 8:45, 15 minutes after the open, expecting 54, and factory orders at 9 Central, expecting 1.5%. And then the rest of the day, the key thing that's standing out for the rest of the day is the meeting between Obama and Chancellor Merkel of Germany to decide on the next steps against Russia on the sanctions. A lot of activity in Ukraine. There's some clashes going on as the Ukraine attempts to take some territory back from Russian rebels. So that's on deck. But overall, we're still trading inside of yesterday's range. Let me pull up my charts here. Picture paints 1,000 words, right? So here we go. So this is the overnight chart. This is yesterday's action here. Test to 71.50 up to 82.75. We pushed through the prior high of 82.50 set overnight by a tick and fell right back in to test the opening swing low, chopped around, and then recovered into the close slightly. So since then, the overnight session has been completely sideways as the market anticipates this economic release. It's incredible. Overnight, we've had a 6-tick range until later in the session where we pushed to 80.50, and then non-farm payrolls put in a high of 86, and so far a low of 75.50. These two blocks right here mark the March. This is the April NFP. I'm not sure why the wording doesn't show up. There it is. This is the March NFP released on April 4th. This is the February NFP released on March 7th. And you can see we're sandwiched right in between them. We pushed to the low end of March's NFP and we are solidly in February's NFP range. Pretty weak behavior so far. So that changes things slightly. The expectation based on how we set up yesterday was for it to push higher. You can see here on the 60-minute longer term, you can see a nice cup and handle kind of formation with a pivot at 82.50. The pivot was taken by a tick yesterday, and the market's just kind of pushed it a little bit today, but has fallen back in. So we pushed to 86 this morning, and we've fallen back in. The high of the year is 92.50. It's within. It's very, very close. It's well within range. The overall delta on this is very, very weak. There's just very little participation on the delta. So it's likely to get. We're likely to continue to see ATR compression or the range compressing as we push into deeper into May and towards the summer. Not great news for us traders, but it is what it is. Again, the market's pricing in a Fed rate hike that's coming sooner, and that's actually let's call it bullish for traders. So overall, the market's opening in yesterday's range. So we're trading currently at 1877.50. Yesterday's most valuable price is 77.25. So what this says is that on the open, we're likely to see a fairly wide two-way chop. I expect that the intermediate term player to come in on both sides. So I expect a wide-ish opening swing like we had yesterday. Yesterday we had a full 4-point opening swing, which set up some interesting areas. It showed us that early on, the short-term trader, the intraday trader, locals, day traders, and so on, were not the ones in control of putting the opening swing into place. And then so we saw a push through the bottom of the opening swing and through the top and back through it. And that creates some pretty decent opportunities for us. I'm hoping for the same thing today, but anything goes in the market. Anything goes in the market, so we'll see what it holds for us in store. But where the most important thing to note is that we have a normal distribution profile with 74.50 to 79 is the value area, and we're opening smack dab in the middle of it. Generally, in my experience on NFP, the market starts to make a move. As we approach the open, the market already starts to price in some movement. So watch out for that if you have an open position, a short-term open position. The market really starts to position itself ahead of the open. Now the news is really good, which the Treasury market's reacting to in a way that that again has priced in a June 2015 rate hike versus prior July 2015 rate hike, moving that schedule up a month. And this kind of confirms what the Fed was talking about just a couple days ago with regards to good growth and the $10 billion taper. It's almost like they had a peek at the number. So that's where we are. If we look back at the April release, the April release made a high at 92, and then kept pushing into the open, and then it opened, pushed to 92.50, all new all-time highs, and it did what it has done a lot recently on all-time highs, which is to sell off. So we had a big trend day, the last non-farm payroll report. We put in new highs, and the market just sold that. The number was slightly worse, but the reaction was pretty strong. On March, so let's go to March 7th here. March 7th, the number came out, market pushed to 80.50 here, highlighted in this kind of off blue color. And then what happened from there? Market sold off. it sold off on the open and just maintained a low posture, and it kept doing so over the next several days. You see, it kept correcting downwards. So I don't know if that'll carry over. It's really difficult to tell at this point, but I know that the fact is the number came out much, much stronger, as I'd mentioned, and the market did test up, so we got the early sweep up, but then it left this long wick on the 15-minute and came right back to the scene of the crime here at 1879 or so, and then that's where I put out a caution low on Twitter and in the S5 chat room, basically indicating that if strength was there, we wouldn't retrace all of it so quickly. So the expectation was for a rotation down. We got that down to 75.50, and now we're back right in the middle of yesterday's value, right up against the point of control of the evening. So what does this tell us? It tells us that it's likely to open choppy and remain choppy. But given the last couple of payroll reports, we've had some selling. 64.50 within range if we start to sell off. Otherwise, we're looking at a push through to 92.50 is the only remaining target upwards. 81.50 was tested yesterday by 5 ticks. Nice layup there, and then the market's likely to return to 64.50 at some point here to find buyers to fuel the move up and through to the 1900, which is a big magnet above. Okay, so the primary hypothesis for today is we're opening here in the middle of everything. We're likely to see a burst up. Depending on where we open, we have plenty of time left here for a move to happen pre-open. If we open above and into the wick of the non-farm payroll, I expect responsive selling back towards yesterday's value. If we open below, then I expect us to chop around in here and then resolve. It's very, very difficult for me to, given the significance of this economic release, to actually come up with something solid for Hypo 1 other than you probably want to sit on your hands for the first few minutes of trading. So I'll leave you with that. Again, it's Friday. It's very important to recognize that you don't want to go into the weekend with a big hole in your pocket. It's a long day, so save your bullets for later. Define your risk, and if the market does not like your plan or is not willing to give you a payout on your plan, then your risk is the only thing that stands between you and losing a much larger portion of your account than it's worth for one day. So if you still are trading without daily loss limits and you're a day trader, then I really strongly suggest you create something and stick to it. The goal for us is to survive every battle and continue to stay in the war. If you shoot all your bullets on in one day, then it's going to be very, very difficult to sustain a career in this if that's what your goal is. Remember, this is not a casino. There are no free drinks, and there aren't any comp meals in the market. So be wise, be smart about the way you trade. Good luck.